Was it simply a case of these stocks actually just getting ahead of themselves?
Okay, I think what we see is that the market actually also reacted positively on all these airlines because of the vaccine program. So it already rallied. So in terms of valuation, it is not that cheap if you compare to previously. So that's why we have all these downgrade for Eastern and Southern. Yeah.
Well, absolutely. And you look at the domestic market, which has bounced back in China. You know, what happens next there? Are we still seeing continued demand recovery, or is it plateaued?
Okay, I think kind of you need to wait because if you see that domestic market, as you said, already recovered, I think back to normal, really very close to normal. But international is not the case, and we need to see the vaccine to be effectively pressing down the number of cases, and then people have kind of more confidence on travel. So then the next step is on the international travel recovery. We do expect maybe in the second half this year we can see more clear scenario, but at this moment we need to wait. So you might be seeing such scenario to be remain at a few months. Yeah.
If that's the case, Kelvin, what's the outlook for profitability for Chinese airlines? Because that's unlikely to happen until international travel returns.
Yeah, very good question. I think that's why we see this year we are still a little bit cautious. We do expect still some small losses for many of these airlines. But of course, the losses is much smaller than 2020. Yeah.
What are the risks?
Okay, the risk is, I think, highly depends on the vaccine. Highly depends on the virus and the lockdown procedures. If the vaccine is not very effective on pressing down the cases and people have no confidence on travel, then the whole thing might postpone. But if it is actually maybe those lockdowns, maybe those vaccine being more effective than our expectation, then things may be coming back earlier.
Kelvin, what's your take on Cathay Pacific? Is the valuation for the stock looking overstretched?
We actually previously downgraded, and I think now it is not very attractive because given that if you see, of course, share price-wise, they haven't back to pre-COVID level, but at the same time, bear in mind they have a rights issue, so the per share value actually declined quite a lot. So if you look at that, probably now is already, I would say, fair value, but not very attractive.
Kelvin, I want to just move to automotive now and have a look at what's going on with some of your calls there. You've got a buy recommendation, I think, on NIO. Is that in any way at the moment in danger? Because, I mean, we've got this Model Y that Tesla produces, and they've had a price cut there. Doesn't that eat into the prospects for NIO in particularly China, of course, in the EV market?
Okay, I think first of all, we do expect the EV market to be very booming this year. We expect around 32%. So with such a high growth, you may not be seeing that, okay, NIO, would it be like declining or flattish growth? I don't think so. I think it's still very decent and high growth given they will have more models to come. And actually, they will have a NIO Day coming over the weekend, so there will be more better products. And also at the same time, if you see the competition of Model 3, which already existed in China in 2020, and the competition against other local brands like XPeng, like BYD, you can see the local brands were still selling very well. So it doesn't necessarily meaning that everyone will move to Tesla whenever there's a Tesla. So there's still, in terms of specifications, in terms of car performance or software technology, some people still like the local brands. Yeah.
Kelvin, but isn't really the narrative here that people are going to be going towards hybrids before they move into pure play electric vehicles? And if so, which are the stocks and which are the companies that you like in that space in particular, and the ones you don't?
Okay, I think you're saying, I think it was true a few years ago, but if you see, I think it's partly benefit from the Tesla coming into China that people actually had a higher interest, not lower, high interest on pure electric in the past 1 year or so, especially those new generation autos. And also the share price also helped a lot. So that's why I think there's a higher penetration on pure electric. Yes, I would say yes. Still, some people will be hesitate to jump to pure, so they might go for hybrid or plug-in hybrid or the Li Auto's extended range EV. That's why you see the extended range EV for Li Auto per that single model actually sold 6,000 units in December, which is actually better than any single model in the other new generation auto. But I think there will be more and more people moving towards pure electric. So I think the trend is still going on that, it's still very booming.
Kelvin, one of the key issues for the EV space in China is government subsidies, and China's beginning to roll back on that subsidy. What's your take on that? What would be the impact? Is production cheap enough for China to do that?
Okay, I think the subsidy will continue to cut this year, around 20%. This was already as planned, as actually announced last year. But I think the major cut was already done, which was a good thing. It was done in 2019. At that time, the cut was around 70%. So now we have some subsidy, but not too much. Probably per car is like 20 to 30,000 RMB. If you say now many EV cars around 200 or even 400,000, it is not that significant as compared to previously. So I don't think the subsidy cut will be having a very big impact, although, of course, people may want to still save a little, but sometimes they will look at the selling price. This may be the like 20 or 30,000. This year may cut another 20%. These few thousand may be easily absorbed by the car makers or the suppliers.